Banking sector is the backbone of an economy, and for India to become a $5 trillion, $10 trillion economy, banking and financial sector would play a very important role. Now, banking and financial sector is subdivided into multiple subsectors. For instance, you have banks that include both public and private banks. Then you have small finance bank. Then you have insurance sector that again include your life, health, general insurance. Then you have wealth management sector that include brokers, portfolio management firm. Then you have AMC sector, and then you have NBFC sector. Now this NBFC is a very broad category that include various subsectors like home finance, vehicle finance, consumer finance, gold finance, microfinance, and so on. And this NBFC sector would play a very crucial role for the growth of Indian economy. Hey everyone, my name is Sahil and this is my Personal Finance Academy. An economy can only grow when the individuals and businesses within the economy grows. And one of the biggest growth driver for an economy is availability of credit facility. Now there are already many banks in India that provides loan to individuals and businesses. In spite of that, there are millions of people in India, especially in rural part, that do not have access to credit facility. And that's where NBFC has emerged as a primary source of financing, especially for unserved and underserved individual and small and medium enterprises. So this picture on the screen represents the AUM of NBFC sector in Indian economy and its growth over the years. In 2008, NBFC sector AUM was 4 lakh crore, representing around 12% of total credit. Banks dominated the space with 60% share. And then NBFC started growing with AUM of 25 lakh crore by 2020. That's more than 6 times growth in 12 years. NBFC contribution in overall credit has grown from 12 to 18%. In FY22, NBFC AUM has further grown to 27 lakh crore, and by March 24, it's expected to reach 34 lakh crore. Clearly, NBFC sector has grown leaps and bounds in last 10-12 years. And I expect this growth to continue in the next 10-20 years. So in this video, we'll explore the NBFC sector of India. There are 5 key topics I've covered in this video. First is difference between banks and NBFC. Then second is key challenges faced by NBFC in the past. Third is future growth prospect. Fourth is key stocks in Indian NBFC sector across category. And now it is not a cakewalk to invest in NBFC sector. So if you Google, there are more than 500 listed NBFCs in India. And there have been few wealth destroyers in NBFC space in the past. So fifth topic that I have covered is the key risk that you should keep in mind before investing in the NBFC sector. But before we proceed, this video is only for educational purpose. Kindly do your own research before investing your money. Alright, let's get started. While banks have the advantage of lower cost of borrowing as compared to NBFC sector, banks have rigid guidelines for lending, whereas NBFC enjoys the benefit of flexibility in lending. Basically, banks have stricter regulation from RBI where they have to maintain reserve ratios such as cash reserve ratio, statutory liquidity ratio, whereas NBFCs do not have to maintain any reserve ratio. Then another benefit of NBFC is that while banks take much longer time for loan approval, NBFCs can approve loan in much shorter duration. Especially now, NBFCs have innovated by leveraging technology in lending process to make lending much faster and smoother. Moreover, banks have been reluctant in giving loans to small business and people from low income category due to the perceived risk of default. And that's where NBFCs have created their own niche. I hope you got a fair idea of key difference between banks versus NBFC. Now let us look at the key challenges with NBFC sector in the past. Although NBFC sector has grown at a very good rate in the past, there have been multiple challenges that restricted the exponential growth of NBFC sector in the past. First big reason was lack of access to funding. Unlike banks that have access to low-cost deposit, like your current account, saving account, NBFC rely on borrowing money from banks or issuing bonds to raise capital. And more importantly, the challenge is to raise money at relatively lower cost of borrowing, because cost of borrowing is one of the biggest differentiator in NBFC sector. Think of it like a raw material for a company. If the raw material cost is higher, the end product cost would also be higher. Likewise, if the NBFC is borrowing money at higher cost, the loan would also be higher. In that case, they would struggle to compete with banks. Moreover, if you remember, in 2018, we witnessed IL&FS bankruptcy that was an NBFC with a total debt of around 90,000 crore. It was followed with default of another NBFC, DHFL. And that created a domino effect in Indian NBFC sector and raised questions around the regulation and governance of NBFC sector. As discussed before, the regulation for NBFC sector are not that stringent like bank. As a result, it created a liquidity crisis as investors and banks became very cautious with lending to NBFC. So it became difficult to raise money at lower cost. And when NBFC sector was recovering from this crisis, it got hit by COVID. COVID resulted in defaults in loan payment, especially in small businesses and low income category, and NP of NBFC sector shoot up a lot. As a result, the stock price of many NBFCs corrected significantly. But silver lining is that there are many quality NBFCs that not just passed the test of these difficult times, but came out with flying colors. And now Indian banking and financial system is in its best phase of growth and lowest ever NPA, and the kickstart of new credit growth cycle. Many NBFCs are looking very promising. So let us look at the future growth prospects. Now, as far as growth prospects are concerned, the biggest opportunity of NBFC sector lies in the small businesses and lower income segment from rural India that still do not have access to credit facility. And there are more than 900 million people, that is around 90 crore people, that still lives in rural area. So you can imagine the potential. Even the Indian government has a strong focus on financial inclusion with various initiatives along with the jam trinity of Jan Dhan, Aadhaar and Mobile. Because our government knows that for Indian economy to grow, its small and medium businesses and low income household have to grow. Moreover, today NBFC sector has got access to low cost credit facility coupled with best ever asset quality with very low NPA. This has boosted the confidence of Indian NBFC sector to grow at much faster rate. Now today, if you look at the interest rate scenario in India, we are at the peak of interest rate cycle, and going forward, this interest rate cycle is expected to reduce. It basically means that going forward, the cost of borrowing should further reduce for NBFC sector, and this will directly benefit the sector. Today, there are many good quality NBFCs that have created their own niche in the domain and have adopted technology to further fuel the growth. Now, when it comes to selecting the NBFC stock for investment, you can't just pick any stock simply on the basis of revenue and profit growth. So let's say there are two NBFCs. Let's call them A and B. Now, NBFC A has been very aggressive in its growth and giving loans without proper risk management. NBFC B, on the other side, has been conservative in its growth and giving loans with proper risk management. However, due to the aggressive growth, NBFC A profits are growing at 30% CAGR, but NBFC B profits are growing at 20% CAGR. Now, which one would you choose? Today, NBFC A might look more promising, but what if tomorrow its borrowers default on payment? All its past profit can wipe out. Whereas NBFC B in the long run would create more wealth due to its good asset quality. So you can't just look at AUM and profit growth in NBFC sector. It's very important to have a robust credit underwriting process so that you can maintain a good asset quality. That's where leadership plays the most important role in financial domain. So there are a few important ratios that you must track, including your cost of borrowing, net interest margin, NPA, and so on. With this, let's identify the key stocks in the Indian NBFC sector. There's no doubt that the growth prospects for NBFC sector are very bright. But like I said before, there are 500 plus NBFCs listed in the Indian stock market. So it's not a cakewalk to identify the best NBFC. So here is my attempt to separate the wheat from the chaff. Broadly, there are 5 subdomains in NBFC sector: housing finance, vehicle finance, consumer finance, then microfinance and gold finance. Now, if you look at housing finance, Indian housing sector is still highly underpenetrated with one of the lowest mortgage to GDP ratio of 11% as compared to US, where this ratio is 67%, and in UK it is 90%. In fact, this mortgage to GDP ratio outside top 100 cities of India is just 3%. And that has created a huge opportunity for companies in affordable housing finance sector that caters to home loan for low and middle income sector of semi-urban and rural area. I've already created an in-depth video on affordable housing finance sector of India and top companies in this sector. I would highly recommend watching that video. I strongly believe that the next set of multibaggers would come from this affordable housing finance sector. So there are 4 major players in affordable housing finance: Home First, Aavas, Aptus Value Housing, and Canfin Homes. All 4 have amazing growth potential. In fact, I've also added Aavas in my next multibagger series. I personally hold some of these stocks in my portfolio that I've covered in my weekly video series on my website. In case you want to explore it, I provided the detail in the pinned comment. The biggest differentiator in affordable housing is that affordable housing finance companies have a very low loan ticket size in the range of 10-12 lakh, and that gets approved within a few days. So they have created their own niche in this fast growing space. In terms of market cap, Home First has a market cap of around 7,300 crore and Awas has a market cap of 12,600 crore. Then Aptus Value Housing has a market cap of 13,000 crore and your Canfins has a market cap of around 10,000 crore. So all of them are small cap as of today. That again creates an opportunity for multifold growth. Although the valuations are slightly on higher side, where Home First command a price to book of 4, then Awas command a price to book of 3.8, Aptus command a price to book of 3.95 and Canfin Homes command a price to book of 2.7. Then next is vehicle finance. Now car is one of the dream of every person and it is again a very underpenetrated sector. There was a report published a few years ago where in India there are only 22 cars per 1,000 individual, whereas in US it is 980 per 1,000 individual and in UK it is 850. And remember, India has the highest population of 140 crore people. So the growth potential in car sector is immense. And one big trend is premiumization, where people are looking for better cars and willing to pay a premium. Then there is an emerging market for used car vehicle finance as well. So passenger car vehicle finance is very promising sector. Likewise, the commercial vehicle finance is also very promising. In this, my most preferred pick is Cholamandalam Investment and Finance that commands a market cap of around 87,000 crore with a price to book of 6. Although the valuations are on higher side, but Cholamandalam has a market leadership and a long runway for growth in the years. Then my second pick is Mahindra and Mahindra Financial Services that commands a market cap of around 35,000 crore and a price to book of 1.9. Then my third pick is Shriram Finance that commands a market cap of around 69,000 crore and a price to book of 1.6. Then next segment in NBFC is consumer finance that has been the fastest growing space in NBFC sector. The simple reason is 140 crore population and their rising aspiration. Today, every product that you aspire to buy is available on EMI, right from the phone, washing machine, TV, AC, and the list goes on. Then you can convert your online purchases into EMI as well as buy things on personal loan. This has exploded the consumer finance sector of India that was led by Bajaj Finance. It is an undisputed leader in consumer finance sector of India. And today, it commands a market cap of around 4.3 lakh crore rupees with a price to book of 8. So market is giving a high premium to Bajaj Finance due to its leadership in one of the largest segment of NBFC space. Although recently Reliance Jio Financials has announced its entry into consumer finance domain, and it would be interesting to see the impact of this competition. Then next is gold finance, that is also a very attractive space where even today, nearly 65% of gold finance market is dominated by unorganized sector that offers gold loan at crazy high interest rate. And this market is being captured by banks and NBFC at much lower interest rate. Now gold loan is also a very safe financing category with an LTV, that is loan to value of 65 to 90%. For instance, if your gold has a value of 1 lakh, then maximum loan you can avail is in the range of 65 to 90,000. You won't get 100% loan. It means in case of a default, gold financiers can easily sell the gold and recover the loan amount. Moreover, there are hardly any bad loans in this segment as people in India have a sentimental value with their gold jewelry. So they always pay the loan to get their jewelry back. In this segment, two promising players are Muthoot Finance that commands a market cap of 55,000 crore and a price to book of 2.6, and Manappuram Finance with a market cap of 12,500 crore and a price to book of 1.3. Although this gold loan segment has been facing stiff competition from traditional bank including both public and private sector. So that is a key risk. Now final segment in NBFC is microfinance. This segment basically provides credit facility to small and medium enterprises that do not get loans from commercial bank. Today, there are millions of small vendors and business owners that need financial help but don't have proper documentation or credit history. As a result, they end up borrowing money from local financiers at crazy high interest rate. In fact, there are still many people in rural part who don't have credit facility. And for India to become 5 trillion, 10 trillion economy, growth in these small business vendors would be of utmost importance. Now, microfinance is a bit risky, where the chance of default are on higher side. However, now that we are in the new credit growth cycle with low NPA, microfinance companies have a very good runway for for growth. In this sector, my preferred picks are Credit Access Grameen that commands a market cap of around 22,000 crore with a price to book of 4.3, and Spandana Spooty that commands a market cap of around 5,700 crore with a price to book of 1.9. Apart from this, there is one more company in NBFC space that is looking very promising. It's L&T Finance from L&T Group. It's a mix of farm equipment finance, two-wheeler finance, microfinance, then consumer loans and auto loans and home loans, etc. It commands a market cap of around 31,000 crore and a price to book of 1.4. Now before we close this video, it's important to discuss the key risk. So first risk is the regulation risk. NBFC sector is not highly regulated by RBI, and that creates a risk of loophole that eventually impact the asset quality of NBFC. So RBI regulation would play an important role in providing stability to NBFC sector. Moreover, NBFC sector is cyclical in nature with long cycles because when NPAs are low, the loan growth is high. But due to high loan growth, eventually NPAs increases. Also, interest rate cycle impact the profitability of NBFC companies. However, today, I think that NBFCs are in the upcycle and hence looking attractive. Then second risk is stiff competition. NBFC companies face a stiff competition from peers in their own domain along with other established banks. Moreover, today there are a lot of new fintech players that have entered into NBFC space. But more than competition, fintech players are more of collaborators that are working with NBFCs to generate more business and expand their reach in rural part of the country. So in this video, we explored the NBFC sector of India. I have no doubt that for Indian economy to prosper, NBFC sector will play a crucial role. But this is very important to identify the right NBFC because it's not just about growth. Credit underwriting with risk management is one of the most important aspects of NBFC. So if I quickly summarize, there are 5 subdomains in NBFC: housing finance, vehicle finance, consumer finance, gold finance and microfinance. Within housing finance, my preferred picks are Home First, Awas, Aptus and Canfin Homes. In vehicle finance, I like Cholamandalam, then Mahindra & Mahindra Financial Service and Shriram Finance. Then in consumer finance, I like Bajaj Finance. In gold finance, I have shortlisted Muthoot and Manappuram. In microfinance, I prefer Credit Access Grameen and Spandana Spooty. And final stock is L&T Finance. Now tell me in the comments, do you hold any of these stocks in your portfolio? And which stocks you want me to cover in detail? If you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.